Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the book, the second edition of When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodGroup.com. Welcome back to the show.
It's always a pleasure.
Are Canadians really fleeing the big city looking for a simpler, easier life in a smaller home out in the hinterland somewhere?
Well, anecdotally, yes. I think there's a good example. Of course, the biggest metropolitan area is Toronto, and outside of Toronto, so Barrie is about an hour north of Toronto. And it's that's on a good day, an hour drive, and even north of Barrie, there's stories, reports of bidding wars on small places with some land and a yard and all that sort of stuff. So whether people actually are just desperate to get some hands on some dirt and some lawn to mow and that sort of thing, I don't know. I think they might just be trying to get away from the crowded downtown area. And then one of the things that is connected to that, of course, is the condo boom that's been going on for 15 years now. And as much as 50% of all the condos the last few years that have been purchased have been investors. And what we see now in the last few months is a huge jump in the number of listings of condos for rent. So the people that are fleeing, if they are, and I think there probably some of them are, that are fleeing Toronto are going to have trouble selling their downtown condo properties in order to buy that dirt. So I suspect what they're doing is they're keeping the condo, listing it for rent to somebody else, and getting out of the central part of the city. And I lived in Toronto through 2 summers, and I don't remember anything hotter than a humid, hot summer in Toronto. And that was a long time ago when there weren't all as many high-rise buildings downtown in Toronto. So I just can't imagine. But I don't think that's why they're fleeing Toronto now. I think the work from home and the COVID-19 and all of the pressures are conspiring to start this shift out of the big city into more rural living, where the pace is slower and the COVID-19 isn't quite as prevalent.
Has that seen a big boost in rural property prices?
Well, I think it's too early to tell. I haven't seen, when they publish, like Terranet National Bank Financial is the one we use, and they just do the main cities, and they have a secondary index which includes smaller cities like Regina, not included in the main one, but they don't get down to places as small as that. So I think it would be difficult to track whether, and the thing is about the properties in outside of the big centers is they're very illiquid, right? So it varies by almost by individual property. I was just talking to some clients this morning, and they were talking about they had some land outside of Edmonton, and they sold it. Well, they didn't think it would sell, but the neighbor really wanted it, and so he bought it from them. And that happens all the time in rural parts of Canada. That the neighbor he's worried about somebody else coming in and buying it, so he buys it to protect himself, or he wants to expand his farm or whatever. So it's or on the other hand, if no neighbor wants to buy it, you could sit for 10 years and not sell that property. So yeah, I don't know. It's there's a lot of space out there, I don't know the number for Canada, but I know in the U.S., 5% of all the property in the U.S. is considered urban, and the rest is rural or parkland or whatever. So there's a lot of room out there if people start leaving the big cities to expand to. But, there's going to be problems. Education for kids, healthcare for older people, commuting, spending a significant amount of your life in your car, going back and forth just to buy groceries and stuff. What about the internet connection? How good is the internet connection? I don't know. But if the internet connection was really good, and if you could work from home, and you didn't need to go for doctor's appointments all the time, it might be a pretty attractive option.
We'll have more with Hilliard MacBeth right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, the mortgage deferral in Canada ends at the end of September. Any signs that the government might extend it?
There's no word yet. I expect they probably will extend it because it's a 6-month deferral. So it actually the ones that were applied for in March will come up and most of those would have been after the middle of March. So between the 3rd and 4th week of September is when they'll start coming up. And as much as 16%, it's unbelievable, as much as 16% of all the mortgages, the official mortgages, and this doesn't include the private lenders, I don't think, are in deferral. People have asked for deferrals. And so that's an enormous amount. It's a couple of $100 billion at least mortgages. It doesn't mean that they can't pay the mortgage. It just means they ask for a deferral. And of course, you don't get out of paying the mortgage. The amount gets tacked on to your loan, and you're paying interest on the interest while the deferral is happening. And I've had several people tell me that the people asking for deferrals, that they could pay the mortgage, but they just, out of an abundance of caution, decided to take the deferral, which I'm skeptical about that, because you're going to your bank, asking for a deferral. You're obviously going to be put on a list of people that ask for a deferral, and that's going to affect how the bank looks at you when you need that next loan. And so if you don't need the deferral, I suspect that most people wouldn't ask for it. But we won't know until the thing ends, and if it's not extended, we really won't know how stressed these people are. But all of the stories, and when I wrote my book, the first edition and the second edition, one of the biggest parts of the story was the excessive debt that households in Canada are carrying, and it's gotten worse since then, not better. So when the people actually are asked to make those payments, if it turns out they can't make them, we're going to have an unprecedented situation in Canada. People generally believe, at the highest levels in the lending industry that I've talked to, that Canadians will always make their mortgage payments. They'll never miss a mortgage payment because it's been true for so long now. So if anything like 16% of the people actually confess to not being able to meet their mortgage payments, this will be a shocking development.
Are there people who have taken the deferral and are saving the mortgage money for a rainy day so that they have finally some savings?
Well, that's the stories that are going around. In other words, 16%. That's the average for all the banks. I mean, some banks are a little higher, some are a little lower, but the average 16%. People just can't imagine that in a severe recession, just to give you an example, roughly, 1 or 2% of all mortgages default, right? So, I mean, it's just the 16% number is so large. Some people might still be employed, and they might think, well, what if I lose my job? So I'll ask for a mortgage deferral, and then I'll build up the savings, so I've got a little cushion, because they don't have any cushion. But we won't know. I think there might be a few like that, but I think most of the people that ask for a deferral probably needed a deferral. And they also need a deferral on their auto loan. I saw a report this morning that 109% ratio to car value. So the average car loan is 109% of the value of the average car, and of course that's going to probably get worse as car prices decline. And then there's credit cards. So in every aspect of it, we're headed for what conceivably could be a Minsky moment. So a Minsky moment refers to a somewhat obscure economist named Hyman Minsky, who was active during the 70s, and I think he died in the 80s, somewhere in the 1980s, who put out a theory, an explanation of how the cycles work, where eventually people get to the point where they just can't pay their debts. And the lending industry up until then keeps lending more money and actually lending money to pay the interest on the loan. And eventually one day though a Minsky moment arrives, and the lenders all discover that the people can't repay their debts, and then there's a default cycle that starts. And many countries have had them. Ireland, the United States, Spain, many different countries have had those kind of crises in the past. It's just we haven't had one in Canada for a long time.
We'll have more with Hilliard MacBeth right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, there's a new trend that's hitting the energy industry. What is it?
Well, the hydrogen power. So as you and I have talked for many times, I've been involved in this renewable energy and electric car for many years. And one of the sources of clean energy, allegedly clean, is hydrogen. But I always dismissed it because most of the hydrogen that is produced comes from natural gas. And of course, there's some carbon involved in that. I mean, you have to do something with the carbon when you produce electricity from natural gas using hydrogen. So, and Elon Musk, who seems to be a brilliant person, although there's some debate about that. I think he's probably pretty brilliant. He calls hydrogen, electricity from hydrogen, staggeringly stupid, is the quote. So,
well, yeah, because right now to make hydrogen, you have to use a lot of electricity. Well why not just put the electricity directly in the car or into your home?
That's what he says. So there's actually two, it turns out there's two ways to do it. So you could get it from the natural gas, in which case you wouldn't need to use a lot of electricity, but you have to manufacture the hydrogen, and then you burn the hydrogen to make electricity in the car. So, and the second way is to use an electrolyzer. So like electrolysis, as we'll recall from our high school chemistry, is where you separate the hydrogen in water from hydrogen, and you end up just with a byproduct of water and oxygen. And that is clean, that's pure clean electricity from hydrogen. But you have to use electricity to power the electrolyzer. And electrolyzers are expensive. So either way, there's a problem. But there is an advantage with hydrogen, it turns out, and that is the fuel cell, which is the thing that makes the electricity from hydrogen, can be put, for example, in airplanes and in large trucks. It can be refueled very quickly, just like a gasoline fueling, and a large amount of energy can be stored for long periods of time in the hydrogen tank. which is the challenge for using electricity from batteries in highway trucks, because you'd have to have a very large battery, or the truck would have to stop periodically for large lengths of time to recharge. And with airplanes, the same thing. So there's a company in Vancouver, actually, been around forever, called Ballard Power, that's been making fuel cells. They claim to be the largest hydrogen fuel cell manufacturer in the world. There's a couple of Chinese companies that do it. And the thing that caught my attention recently was Germany and Europe both put out major new clean energy programs as part of the stimulus to get out of this recession. And they really put a big emphasis on hydrogen, which I was surprised, because they don't necessarily have a lot of natural gas over there just lying around, not like Canada. And but that was a big part of their program. So there's something going on there, and I don't fully understand it yet, but it could be the sleeper in the new energy. But to meet the goals that some politicians in the United States have set out, it's going to take everything. It's going to take hydrogen, wind, solar, everything you get your hands on, because the goals are very, very ambitious.
Mm-hmm. Joe Biden, if he wins the presidency, does he have plans to make a big switch like that?
Well, what he's talking about, so his plan came out recently, and he's talking about a massive amount of expenditure. And also, most of these plans that I see, they use a year like 2050. Well, that's so far off, so 30 years away. Who knows what, But he said clean energy for electricity by 2035. Well, pretty soon that'll only be 14 years from now, and that is massive, because an awful lot of electricity is manufactured in the U.S. burning coal. So he's talking about a huge game-changing situation, and if he actually goes through that, and he had some specifics, but they were very general, like so many solar panels. It's not really very specific. So many wind turbines and all that sort of stuff. But the U.S. is quite far behind China and Europe in terms of how much they've done in these areas. So if the election in November goes to Biden, and if he follows through on this plan, there are two big ifs, but not, they probably look like now at least at a 50-50 chance that Biden will be in there. Then, and if he sticks to the plan, and I think the more progressive wing of his party will force him to go in that direction, then we're going to see some big changes in how the energy sector is handled in the U.S. Could be very bad for the frackers in Texas, and very good for the people that make solar panels and hydrogen and wind.
What does that mean for the Canadian energy scene?
Well, Canada, we got the biggest share of the market down there. They import in the U.S. They were importing about let's see here, about maybe 8 million barrels a day, and Canada was getting almost half of that. And a lot of that was made into gasoline and diesel. And almost all of it, 3.5 million barrels, came from Alberta and northern Alberta and the oil sands, generally. And the pipelines are in place. They were running at full capacity, but they still are running at full capacity. But the imports from other countries are pretty tiny. Saudi Arabia, less than 1 million, all that sort of stuff. So if there's a shift away from using crude oil and petroleum products, it'll be a big thing for Canada. It'll be a negative thing for Canada. So Canada needs to think about, can we count on that export to the U.S. Wherever? One of the things that could happen is because the demand for gasoline is shrunk because of the COVID-19, but it might be a sign of a trend that it's going to continue longer than just from COVID-19. We need to think about other export markets that we could use, or other export products that we could use in Canada.
Is there any effort to build a pipeline from Alberta through the Northwest Territories to Blue Water?
I think that there was one. I'm probably the only one around that remembers, but the Mackenzie Valley Pipeline was a big deal in the 1980s, but it never went ahead. And now that the Arctic Ocean is becoming more ice-free for part of the year, theoretically it would make sense, but I don't think there's really any need for it. I think there's a lot of... One of the problems with Canada's situation is Canada has to use these massive pipelines that go thousands of kilometers. But there's an awful lot of energy, whether it be liquefied natural gas or crude oil or other sources of energy, that is on tidewater, and it can be just shipped. And most of the people that use this stuff are living close to tidewater. So, like, there's a huge number of export terminals being built right now in the Gulf of Mexico, in offshore Louisiana and Texas. And they load up the liquefied natural gas there and send it to China and Japan and where it's needed. And it's hard to compete with that when you've got to build a pipeline either through, the one that they're obviously working on is from northeastern BC to the west coast of BC to put liquefied natural gas out of there. But it's much easier if you're already on tidewater. The natural gas that goes to Texas and Louisiana would come from the oil fields in Texas, and basically they're just flaring that gas. It's completely, it's got a negative price on it because it's just a byproduct that they have no market for. So that's why they're building these liquefied natural gas terminals, and so for them, they don't need a huge price for that natural gas. This is kind of something they're currently throwing away. So it's hard to compete with that.
Hilliard, gold, did we talk about that? I think we need to.
Gold has just hit the record, $2,000 an ounce. Now, adjusted for inflation, it's probably not equivalent to the $850 an ounce in 1980. And I remember very clearly. In fact, I was just a rookie stockbroker at the time, and the TV, gold was so hot, the TV cameras actually came into our office, and somehow I got picked to do the interview, and I had to talk about gold and 800. And of course, the day that it hit 850 was the day they did the television story on gold. And so here we are again. I don't know how many, 40 years later, and gold's hit a new peak. But the main thing with gold is that when interest rates when the real interest rate is negative, of course, obviously the interest rate itself is like half of 1% or 1% or whatever on the U.S. Treasury 10-year. But if inflation is 2%, then you're actually getting a negative return of 1%. So the cost to own gold, which is usually you have to give up an interest rate that you could earn on government bonds, is now basically zero or less than zero. So people are excited about gold. The other thing is there's a lot of concern about the U.S. dollar. Is the U.S. dollar going to continue to be the reserve currency of the world? Is it going to survive? And so people feel more comfortable with something tangible like gold. And so there's a lot of speculation in that area. And then the other way to play gold is with the shares of companies that mine gold. So gold mines are notoriously difficult to find. So the companies that produce gold are always searching for the next big find. And there haven't been really any big finds for quite a long time, partly because people weren't doing much exploration. So with the price of gold now at close to $2,000 an ounce, there's going to be a huge surge in exploration. There's going to be a whole bunch of junior gold mining companies that'll be coming up. Some of them will be for real. Some of them will be speculative at best. The whole Vancouver Stock Exchange used to thrive on this stuff, and I think this time we'll probably see this gold rally last a little bit longer than the last couple of times when it's happened and fizzled out, and we'll see resurgence in that industry. So if investors are looking at a way of playing it, don't overlook the possibility of buying companies that mine gold, because they have reserves in the ground. You get some leverage there that you don't get just from owning gold directly.
Hilliard, thank you so much for chatting with us.
Nice to be here today.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodGroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.